Hi guys, it's Yvonne, and this is so exciting to do this on a Monday afternoon. I wanted to just answer some of the questions that a lot of my clients has been asking me. This is actually live today. I am excited to be here. I'm excited to hear if you have any comments or questions. So let's get to. I will have a special guest, and he is a lender. So all the lending questions, I'm going to leave it up to Oscar. And okay, so one of the questions that came in. And I'm going to go back and forth between my phone and my laptop because, I have all these questions everywhere that, I got texts and stuff. So one of my really cool clients, her name is Pam. We sold her property in Desert Shores. And now her question is, it's actually kind of like a tricky question. She goes, "Hi, Yvonne. What are the 4 P's in real estate for investors, and what are the 4 C's in real estate for home buyers?" Isn't that like a little tricky, don't you think? So I would say that the 4 P's are basically property, price, place, and people. And the 4 C's is going to be credit, capacity, collateral, and capital. So, it's very important about where the asset that you're buying is, what's the condition of the property, right? That's the property. Price. Price is the most important thing, if not, other than location, for real estate, right? And that's the next item, which is place, which is the location. Location. That's the most important thing when it comes to real estate. Next, we have tenants for people. So we have tenants, property managers, and if you're buying property by yourself or if you have a partner. So next is the 3 C's, and 3 C's are credit. Very, very important that you have really good credit. And if you don't have really good credit, you're going to pay a little bit to make it up, right? Next thing is capacity. Are you available? I mean, your abilities or your ability. Do you have income? Do you have debt? So it's important that, the lenders see that you can pay. Otherwise, they're not going to let you get a loan, right? Unless you're paying cash. Collateral. So the property itself usually is the collateral, so you don't have to worry about that. And capital. Capital means down payment. How much savings do you have? So those covers the 4 P's and the 3 C's. All right. So next question. All right. I'm going to look at my phone right here. Some of the questions are easy and some of the questions are tough. Okay. So I have another client. Yes, I do have a property inspector who's on his way as well. So I'm going to let Chris know to come in. So Chris is, I think, yes, I'm inside the podcast studio, inside suite 110. So Chris, our inspector, is on his way. I'm excited to have him. Sometimes you just don't know who shows up, like a box of chocolates. Okay, so let's see. I got questions. What is the next question that we have? I have like so many questions, but I got to make sure that I get to the right ones. On Facebook, I have some questions too. All right, so Keith, he has a nickname. His nickname is Ace because he loves to gamble. And we sold him a beautiful single-story property in Henderson that like backs up to the mountains. It was so gorgeous. Okay, this is a question that he has. Are you ready for this? Keith says, the question is, can I really afford this house? Perhaps. This one even affects me. This is an awesome house and has room for my pool table, but it was a tight squeeze for me. Hello there. I got Chris in here from RC Inspections. Hi, Chris.
Hello.
So, okay, let me finish this question. So Keith has a question. He says, can I really afford this house? buyers want to know if they can afford the property, right? So perhaps this is it's an awesome house. It has room for my pool table, but it was a tight squeeze for me. Honestly, had I not been taken in by some girl on the internet, do not send money to some girl on the internet, by the way, who promised to come to me. I sent her money. I would have been okay, but I'm still struggling and I will need your services coming up. So to sell this property and get something nice. Keith, I would love to help you, whichever way is going to make sense to you. But here's the real question. So we might want to ask Oscar. Oscar, his question is, I'm going to put on my headset so I can hear you. Okay. Oh, nice. DC up there. Yeah.
Sorry.
Is that good? Okay. Okay. Okay.
Hi, Yvonne.
Sure. Hi. Like, what happens how do you qualify people that they can buy the house, but it's too tight, of like a transaction where, they're going to be house rich and, cash poor.
It's difficult, right? We have to use an automated system that.
By the way, Oscar, can you give us a 30-second intro so we know who you are?
Okay. Yeah, you can hear me good, right?
Yeah, I can hear you.
Yeah, well, I'm Oscar Reynaga, licensed loan officer with a company called Loan Factory. We're a broker, direct lender through Rocket Mortgage, one of the biggest brokers in the nation. And I am licensed here in Nevada, California, Texas, Georgia, and Florida. So I'm licensed in 5 states.
Wow. Cool.
Yeah. So I've been lending since 2001. I was involved with lending, and also I know a little bit about real estate. I'm licensed in California and also part of EXP Mexico and International, and EXP USA.
Thank you.
Yeah.
So what makes it where it's kind of dangerous to buy too much house? I mean, how do you, advise somebody who's like, oh, I'm not sure if I should buy that property. And, it sucks to be house rich and cash poor.
Yeah. Well, one of the things that we need to analyze is liquidity or cash after making that mortgage payment, right? Do you need to change your lifestyle to get into the house, or do you just need to pay off the car or plan, 3-6 months to pay off some of those credit cards and then be in good standings, right? So doing some of the stuff in a pre-assessment basis will definitely put you in a better position.
Gotcha. So definitely you want to get some prep in, right?
Yeah, anticipate, try to mitigate some of those monthly payments that you're dragging, and you just have a little bit more of cash flow per se on a monthly basis before you lock in the property.
Okay.
Yeah.
Cool. All right. I have another question, and this is from Michelle Ash. So Michelle she's a homeowner and she travels the world for her business. She has a question for me, and she says, let's see. This is what she said. Some questions for her when she's buying is if there is a fence yard, what type of neighborhood it is, the quality of the schools, the year the house was built, is if there is a new roof. Chris, this is going to be your stuff. How old is the HVAC? When was it installed? And what are the yearly and monthly fees? Are there local businesses around? What kind of grocery stores are there? Is there a vet clinic, dentist? Where is the local Costco? She said, I can tell a neighborhood by the businesses nearby, right? That's what she's looking into when she's buying a property. I actually sold her property out here, and she bought in Colorado. But she travels the world. Literally, she was just in Italy.
Oh, wow.
Yeah, but she still owns property out in Vegas. But anyway, this is what she said. I was talking to a friend about real estate, and my biggest question is and Oscar, you might come back in, is you just listen in. It says, if I were a first time buyer, I would like to know if you're going to help me look for a house or put me on a drip, right? This is probably more for the realtor, I think. Do you have me do the work? Especially for a first time buyer, knowing that the realtor is invested into finding you a home and not sitting back, letting you do all the work, is the kind of information, especially new owners, not only need to know, but wants to know. People like myself who have purchased homes tend to do a lot of research themselves because we have purchased and we know exactly what we're looking for. But for newbies, you might need to hold their hand. Hopefully this helps. So I think her main question is like, to realtors, are we going to be looking for properties for them, or is the new home like the person just buying it for themselves? So it just depends. I mean, like, everybody is on the internet these days. 70% of the, people look online, right, before they reach out to a realtor. I just recently helped a homeowner purchase a brand new home. I was literally in Lake Tahoe. This was a year ago because my kids play hockey and, I had to go to Tahoe, and I had this client and it's actually the dad calling, and he goes, Yvonne, my daughter needs to find a house in Vegas and Henderson, and I'm in Tahoe and I can't show them property, right?
Right.
But they wanted a brand new home. So I said, okay. He goes, we're only going to be here for 2 days. So what I said is, okay, let me set up the appointments for you. So I call all my new home people because I already have a price point for them. I said, oh, you want to be under 450,000, this is the payments. So I said, okay, let me call my Century Communities lady. And then I call my Beezer. And this is actually in Cadence. And also I set them up to go to Inspirada because they wanted to be in Henderson. So I told them, go here, go here, go here. We set that up. They found a home. I literally, set it up. So it just depends. It could happen that way, or most buyers are going to look online,
Right.
Yeah. Mm-hmm. I hope that helps.
Yeah, there's a lot of access online nowadays.
Yeah, definitely. And it started like 15 years ago, right? Okay. Let me see, what are your questions that you got that we should answer, Chris? By the way, Chris, can you introduce yourself real quick?
Absolutely.
Yeah.
I'm Chris Mitchell, owner of Real Choice Home Inspections. I've founded the company back in 2009. My background is 30 years in the trade business. The reason why I got into this business is because it kind of fell under that scope and didn't have to break my back and get as dirty anymore. So, I've been loving it ever since I've gotten into it.
You definitely have an advantage, I think.
Mm-hmm.
Yeah, because you use all the new techs,
Right.
You use the infrared, you see behind just not just the walls, right?
Right.
And then also you use a drone.
Yeah. We use
tell us
all the
about
high-end
that.
technology that we can get our hands on, for sure. And what's most important too is my background, the knowledge. A lot of these guys see, the potential of making something, money-wise, and I think, well, I'll go get my license. And, they were changing oil, before, and they have nothing, no clue about homes.
I'm sorry. So what is it that you were doing before, and for how long?
So I've been in every facet of the trade business. I've done concrete work, framing, stucco, drywall, you name it, tile, everything.
So you mean you're the kind that wakes up at 4:00 in the morning?
No, I didn't do the 4 o'clock. That's too early.
Okay.
Unless we were traveling like an hour and a half, somewhere we had to be up that early.
But construction trade, you're always early though.
Yeah, it is early. And there's been many times because, originally I'm from Utah. So, it'd be freezing cold and we'd be working in the mountains at 6 a.m. That was no fun. It was a lot of hard work. Yeah.
Mm-hmm. So what is the challenges for a buyer? Especially when it comes to let's talk about, new home construction versus
like resale.
Yeah, resale.
Yeah, I love talking about that because people think because it's new, it's nicer, and I own a new home. I own a new build, and I do a lot of inspections on new builds, and that's not always the case. There's times where I've gone into new builds and I've found multiple issues, just 4 pages full of like broken trusses, missing insulation.
Oh, broken truss is like the worst thing that could happen.
Oh yeah.
Yeah.
And then I'll go into a resale that someone's kept up on. Like original homeowners are my favorite because they keep up on their houses so good that they make my life much easier when I do an inspection for them, because they're prideful of that property most of the time. So, but I do like new construction. Don't get me wrong. I like the smell of a new car, basically. But
I don't know that that's good for you, by the way. Yeah.
But it can go either way for me, because you can find cool old homes, and I like, as long as it's well built, that's all I care about. It doesn't have to be new. It doesn't have to be old. So I look at a lot of things when I go into a house, because I see a lot of crazy things. I've done over 25,000 inspections personally.
That's a lot.
It's a lot. I was doing 5 a day, 7 days a week for over a decade.
Oh my God. By the way, Chris is like so hardworking. One day I'm like, Chris, where are you at? I need your help. And he goes, well, I'm over here. And then when I got there, I saw a car delivering food. I was like, hey, is that your wife? He's like, no, it's not my wife. He was actually, what was that? Like,
oh, some Postmates probably.
Exactly. He's
I don't get
Postmates.
to have a normal lunch break like everybody else. My lunch break is either driving and eating to the next inspection, or if I'm lucky enough to even get something at the house I'm inspecting. So
how many inspections do you do a day?
Well, we've slowed down quite a bit because of the market, and then just the saturation of other inspectors coming into play. But we used to do, I was just talking to a friend of mine on the phone before I got here. I used to do 150 a month. That slowed down quite a bit. So that was about 5 a day, 6 a day. In COVID times, we were doing 10 a day.
That's a lot.
Yeah.
That's definitely a lot.
Now we're doing 2, 3,
2, 3.
Maybe sometimes 5. Yeah, it just depends.
Okay. Before I ask you, easy questions, I have a really hard question for you. Why should they hire you?
Why should they hire me? Just my knowledge alone is that's money right there. You can't just buy knowledge, off anybody. Somebody with background that knows every facet of a home is important. Just because you went to the school and did the 6 weeks training to get your license and take a test, you're not ready for it.
Yeah.
And you're going to miss a lot of things, and you're not going to know what to point out. And so a lot of guys that are new, they're pointing out little hairline cracks that are not important. There's a lot of things that they should really be focusing on, or they may not even know certain codes or, certain things that they are going to completely miss and not report.
Do you have continued education?
I do it continuous education every 2 years as far as my license go. But I constantly, and even to this day, even with the 30 years experience, even with being an inspector for the last 17 plus years, I still educate myself daily. I'm always researching stuff because things change all the time. Codes change. Now builders have to put, instead of having a GFI actually physically in the kitchen, they can just put it in the panel. As long as it's on a circuit, that's all that matters. But see, those kind of things, and that could throw somebody off. Well, there's no GFIs in the kitchen. Well, they don't technically now have to have that. It has to be on a circuit, but it's important to know these things before you call it out and then make big deals and make a mess, that can cause more problems for your agents. And, you don't need that.
Yeah. Most of the time as an agent, like for example, I'll tell you, I just went to see a property on Saturday. This house was 4,000 something square foot. It was a huge house. Nice. It was it's really close to Chinatown and no HOA. And oh my God, you cannot believe the price.
Yeah.
What do they want? It was only $700,000.
Wow.
With a huge, beautiful backyard. It's a large yard, and there was a really tiny pool.
Really?
Just to get yourself wet.
Yeah.
And it was interesting because this house had decking, and you never see decking in Vegas, right?
Yeah.
So the decking was kind of warped,
Oh, needed some love.
Yeah, because you can tell, like, you know how the drainage is supposed to go straight to the front of the house, but it was like this. Some of it. Yeah. I spent an hour and a half, and I videoed like what was exactly wrong with the house, because my clients were, not from here, and I didn't want to be like that call, that call that says, Yvonne, you sold me this house, and you never told me about A, B, C, D, E. And I went through the house after I got the inspection from another inspector, not you, Chris. But, I got the inspection report. Technically, the listing agent gave it to me. So I did it. It took me an hour and a half. I made a 30-minute video. And if anybody wants a video, just DM me and just say inspection, and I'll send you the YouTube video. But anyway, what I'm saying is, like, all that, the inspection makes it look so bad. Before you see the house, you look at the inspection report, you're like, there's like freaking 40 items wrong with it. And you freak out. And then you go see it, as an agent, and you're like, oh, this house actually is not that bad. The only thing is, they had cut truss. And then they had the pool equipment was like already like, how do you say, kind of like rusted. Man, that 4,000 square foot house like is a lot of work, Chris.
Unfortunately, too, people freak out, I think, a little too soon because they see a bunch of issues. But in reality, just because I know how to fix all those things, like, I personally know how easy it is to take care of them. And a lot of it can just be left alone for the most part. But some people freak out and they're like, this is the end of the world, when it's really not, and that's why I try to educate, clients on like, hey, there are quite a few things I've caught, but it doesn't mean that this house isn't livable or going to be a great home for you. Now there's times where I've said, hey, my mind, I really want to tell them to run, because there's times where it is bad. But honestly, that's more rare than you think. Most of the time, it's just basically the same things I always find daily, Got it. But,
well, thank you. That was good insight.
Absolutely.
Okay, so I also have more questions. This says, next question. I have this amazing person. His name is Jay. And Jay says, there are two things that I always see come up with people that want to buy a home for the first time is, and Oscar, you might want to answer this one. It says, how much money, do you need to save to buy a house? And how on earth can people afford a home?
That is the $1 million question, actually.
Really?
People come in and they have no idea, how much their closing costs are going to be. They kind of, in a sense, what the down payment might be. But a lot of people are confused between, how much down payment I need, down payment assistance. They get it all confused, right? What I do is I sit down with the client, right? And depending on priorities is what we structure, right? So there are the savings, sometimes we strategize getting a gift from family. 3% is the very minimum down payment for a conventional loan.
3%.
Yeah. 3.5 is the very minimum for an FHA loan. And then 5% down payment for a conventional loan is always going to get you into a much better position, because at that point, we can structure your loan without the mortgage insurance, or have us as the lender pay for the mortgage insurance. So there's a combination of structures, right, that you can go with. But my rule of thumb here for Las Vegas is typically a 3% for closing costs, right?
For first-time home buyer.
For first-time home buyers, right?
3% for closing costs.
The FHA loan does have what's called the upfront mortgage insurance. And so that money needs to come from the client, right? Even though we finance it as the lender, we still retain it for you, right? Give it to HUD, right? And so if you sell the house in a year or two, you may get most of it back, right? But it's your money that needs to come into us as a form of closing costs.
Okay.
And that makes it a little bit more expensive for an FHA loan. Because again, it's your typical 3% plus, call it another 1.75 for closing costs. But, it's not a general rule, right? It's again rule of thumb, right? It's start with that, right? So if you have about, call it 3.5
5% maybe total.
plus 4%, I think you're
Mhm.
safe. I think you're safe for an FHA loan, right? Because
Okay.
closing costs will vary by title companies, will vary by the contract, right? You know it better than I do. So transfer taxes being paid by the seller, that
Mm-hmm.
saves you a ton of money.
Right.
Lender's title policy, which is part of the contract. If the
Mm-hmm.
seller pays for that, we save the client sometimes up to $2,000 or maybe even more.
Okay.
So
So
all of that helps when the experienced agent comes in and negotiates all those terms for the buyer.
let's do a calculation, okay? Because people hear all these things, but in their
Yeah,
mind, they have no idea what it means. So
right.
let's say the average price right now, Oscar, is like 400 and let's say 80,000. Okay,
For
a
80.
home is 480,000, and so let's say Jay is a brand new buyer. He's never owned a home before. So how much money? And let's not talk about the seller paying closing costs. Let's talk about
Mhm.
like if he's coming in with that. Obviously, we can negotiate that down the line, but I just want him to be prep. So how much money do we need to have Jay save before he can buy a house? He literally is going to be my next buyer,
For an
but he's
FHA
not ready
loan,
yet, huh?
for an FHA loan,
Yeah,
and
he
what?
could go FHA. So the interesting about him is that he owns a business, but he also pays himself as a W-2 employee. Kind of like me and you, we're all business people, right?
Right.
Mm-hmm.
Right. So
Yeah,
he owns the corporation, right? Okay,
right.
yeah. So the basic will be 7% if he goes with an FHA loan, which is a little bit over $30,000, 33,000, right?
33,000. Okay.
Yeah. Now, if we go with a conventional loan,
Mm-hmm.
chances are
Mm-hmm.
that 7% may be enough, right? With a 5% down. Because again, with a conventional loan, we do not have upfront mortgage insurance. So that will save Jay almost 2% of that 7%.
Mm-hmm. So just
So again,
5%.
yeah, 5% if it was conventional.
And what would be the payments looking at? Like
That varies a lot. We can't really quote a payment without knowing, the details.
the
And
rate?
yeah, the rate and payment are separate things, right? Quoting a rate will need a couple of things, right? But I can tell you what the average is right now with our
Yeah.
company. We're
Okay.
averaging 5.75 today on an FHA loan.
5.75 is really low. That's a really good rate.
5.75. Yeah,
Yeah. Uh-huh.
it's a pretty good rate. And
And
all you need is a 660 FICO to get that. You don't need a 780 or 730. 660.
okay. Okay.
Right. No down payment, of course. And then for conventional with a large down payment, 739 FICO, we're
Mm-hmm.
averaging about 6.5 today. Okay.
6.5%. So the FHA rate is a little bit lower. Conventional rate is a little bit higher, but the difference is you pay that money up front for FHA.
Yeah, remember that FHA will have two types of mortgage insurance, which makes it more expensive on the monthly payment and also on the closing cost, which is the
Oscar,
upfront part and the monthly.
uh-huh.
Right? Yeah.
Oscar, what is the down payment for a conventional loan? Was it 3%?
Minimum 3%. Yeah. Yeah.
Okay. So, what is your range? I'm not asking you for an exact number. Taxes are 0.1% in Vegas. Henderson slightly higher. But what would be the range if they bought a property for 480, if it's a FHA today?
Monthly payment range.
Mm-hmm. Yeah.
Let me do the math really quick.
Okay.
But yeah, it's gonna vary a lot because also even on resales, right? We
Mm-hmm.
might
Yeah.
have properties where taxes are only 850 a year, and then some properties may have a 10 years or 11 years newer property or 15, and the
Right. It's
taxes are
higher.
4 times more. Yeah, so that makes a big difference.
Sure.
Insurance
Let's
insurance
talk
is another
about
factor.
PI. We can talk about PI TI. I mean, just PI. How's that?
Sure, that's fine. Yeah, we can do that.
Okay.
So I can give you a payment for a conventional loan with 5% down. If we want to use that as an example right now,
Okay. 5% down.
5% of 480 is $24,000, right?
24,000 is just the principal and interest, right?
Right.
Let's say your insurance is like maybe $100, then you would be at 2,500 plus taxes, right? Depending on the taxes.
Yeah, so depending on the taxes.
Yeah. So, no, that is definitely good information to know. So, I love selling new construction, Oscar, and I know the difference literally is night and day. If you follow my feed, you'll see interest rates as low as 3.99 real interest rates. Okay. There are like builders that actually publish rates at like 1.75%. But you know what? Those homes are not in Vegas. They
Yeah.
lie. It's not in Vegas because I
Yeah.
literally call them and I'm like, I'm not gonna tell you who the builder is, but I was like, hey, where's this house? Can I go film it for 1.75%? I want to buy it, right? They're like, oh, you know what? It's a national thing. It's not in Vegas, but we can sell you a home at 3.99. Mm-hmm.
Yeah.
So there is definitely a big difference. I just calculated a property that was by another builder in the Southwest. They have the largest amount of land out here, and let me just check this out. So for a house that they were selling, it was like 4,200 square foot home, and they are trying to basically give it away because when the builder doesn't they build a house and then they have a certificate of what do you call it, occupancy.
Right.
So the moment that they get that certificate of occupancy, they are starting to pay, and they have holding costs, right? So this holding cost makes it hard for them because they have to pay for the home. So they're like, this house is built, we need it sold right now, because they're not in the business of holding it.
Right.
So when that happens, right? So they had one that I saw, they were giving it away at 4.99%. The price of the home was like over 900,000, but I know we can negotiate down maybe even 100,000.
Wow.
Wow.
No.
Yeah.
There's a lot of
$14 per square feet is super cheap for new construction.
Yeah, but you know what? It's also 3-story. Because you can't get that big land. So that's the difference between buying, resale where you have, like a ranch style home. Yeah. But we do have more questions. Pete has a good question. What is it? It says a good buy suggested for a VA buyer who wants to keep their monthly payments around $5,000 a month. All right, so we have to reverse engineer this, Oscar. What would be a good buy suggested for a VA buyer who wants to keep their monthly payments around $5,000? We can talk about resale, and I can talk about new homes. How's that? So
it's roughly about 800,000 with my rates, right? Of course, if it's a new build, it's gonna be more buying power. But my estimate is about 800,000. Plus taxes and insurance. But if we want to add that, then of course, we still have to see the FICO score to make sure that this bed qualifies for my premium rate, which is I'm using a 5 3/4 fixed for 30 years.
Would that be because with VA buyers, would that be a like jumbo rate, or VA buyers you don't have a cap? You can borrow like 2 million, 5 million, doesn't matter.
No, they still have to qualify, right? The biggest question here is the ability to repay, meaning that the income needs to be in line with the debt-to-income ratios. But they can qualify for something like this if the VA approves. Most everybody will, having the income. So yeah, we don't have such a limits,
So Pete, did we answer your question? I have another question, I think. Let's see. How much? Okay, Jim has a good question for you. Jim Vogel, he is a local real estate agent out here with EXP, and he can sing and play the guitar, and it's super fun. His question is, how much down on a conventional loan?
Yeah, again, so you need to be able to income qualify for the loan, right? But the bare minimum is only 3%. That is the agency guideline, right? Fannie Mae or Freddie Mac, 3% minimum. And then from there, the homework is like, where do you want the payment to land, right? And that's when I sit down with the client and start exploring different options or combinations.
Okay, cool. I have a question by Trevin. He is behind the scenes, but his top two questions are: what's the best way to get investment properties? And why would I do a HELOC versus a refi? And this is, before you answer the official one,
Yeah.
I think that anybody who has equity in their property might want to do a HELOC before a refi, especially if that refi, like, you don't want to screw up your really beautiful rate. If your rate is like 2.99%, 3.99%, and that is locked for 30 years, do not touch it, do not sell it. That's like beautiful. That's a gift, right? And you do want to do a HELOC so that you can take your equity out and still keep that really, really cool rate and payment. Because if you do refi, right, that thing is gone and you start 30 years again. Like, I just think that you're giving it away.
Yeah.
I think. Yeah. What do you think, Oscar?
Yeah, at that rate, you're using the bank's money to pay off a house, right? You're using their money, right? So they're leveraging on the bank, right? So don't give it away. Don't turn it into a refinance, because you're never going to see it back. So yeah, get the HELOC first. HELOCs are available up to 95% loan to value with some of my investors.
That's
Right.
really high.
Yeah, it's very
95%.
high.
Yeah, Nevada State Bank only does, like, I think 75%.
75 or 80. Yeah, I was
Yeah.
talking to Mountain America, Credit Union, they only do 80 as well, right? But again,
Yeah.
we got Wall Street money, sitting on piles that, they're looking for property to allocate money into. So, as long as the client qualifies with their income taxes or tax returns for the past year, and they can show that they have the ability to repay, we can hit up to 95% of the property's value.
Question.
For
Okay.
owner-occupied. For private
Oscar, can we take the money out of the HELOC, right, and then use that as a down payment to buy an investment property?
Yes, some investors will allow that, some will not. Okay, so you just got to tell me what the plan is with the money so that I can place the loan with the right investor.
Okay.
Something like that, yeah.
And what is the regular Fannie or Freddie guidelines on that? Is that the yes or the exception?
Well, Fannie and Freddie don't do HELOCs, right? They don't insure HELOCs, right?
All right.
So these are private institutions or banks, right? That
Uh-huh.
portfolio HELOCs. So they just allow it, right? So if you combine someone that doesn't want to pay mortgage insurance, for example, right, and they qualify for a HELOC and do have the 5% down, they can buy a home with 80% no mortgage insurance. The other, in 25% or 15%, they'll put it on a HELOC. There's no mortgage insurance, but Fannie
Gotcha.
does not insure HELOCs.
But will that change your debt to income ratio if you have a HELOC and then plus, you're buying property? I'm just curious.
It does, right? But going back to the question, right? So if you're investing in real estate and you have positive cash flow, then you're going to be good, right? The HELOC is just an instrument to get into the house, to buy the house. And then you need to focus on paying that off as soon as possible. And then use other people's money to buy more real estate. Use the bank's HELOC money, pay it back as soon as you can so you don't pay interest long term, and just keep going. Move into the next investment.
As long as you qualify, right?
Exactly. Yeah, you need
Okay.
to income qualify, or of course, there's other avenues, right? Such as DSCR financing for investors, investment property, profit and loss statement only, right? So there's just a P&L program for investment property, all kinds of other methods to qualify for more real estate.
Okay. Good info. So Jay Garcia has another question. What is the difference between FHA and conventional loan? All I hear is about FHA, wondering why people wouldn't, don't suggest conventional as much.
Because the interest rates are higher, number one. Typically, the interest rate is going to be half a point minimum higher than the FHA.
Mm-hmm.
So when you compare payment to payment or apples to apples, your payment is always going to be lower with an FHA loan.
Okay, got it. Lower with the FHA.
That's number one. Yeah,
even when you're prepaying that FHA amount?
Yeah, even
Mm-hmm.
when you're prepaying the upfront MI.
But the thing is, don't you have to pay that for the life of the loan, the PMI?
Right. So there's two types of mortgage insurance, right? The one that
Okay.
you pay up front, which is only one time, and
Mm-hmm.
then there's your monthly MI, right? Which
Mm-hmm.
if you come in with 3.5% down, actually with less than 5% down, you will pay it for the life of the loan.
Exactly.
But if you do 5% FHA, then
Mm-hmm.
you're only obligated to pay it for 11 years.
11 years versus for the life of the loan.
Exactly. Yeah.
Okay, Jay, I hope we answered your question.
And then, of course,
Um,
Yvonne, credit score is a major, major difference, right? You can buy a house with an FHA as
mhm,
well as 580 credit
mhm,
and only 3% down payment. 580
580.
credit is super low, right? So those are the two main characteristics that makes them so different.
Cool. Thank you. Thank you. Okay, I got another question here. And Tariq is a licensed agent, and he's definitely giving us really hard questions here. It says, how do I start the process to see if I can purchase? Question number one. Question number two, why does new home builders don't offer down payment assistance? Okay, so let's start with how do I start the process to see if I can purchase? So me as a realtor, I kind of my brain is like I'm gonna split in half, and I'll be like, okay, are you going new build or are you going resale? So I'm gonna ask those questions because I want to determine what is your ideal home? When you tell me, Yvonne, I don't want to buy a house with a lot of maintenance, or I really want to fix the upper and I want a lot of land, then I'll know which way you're going to go. So once I figure out which way you're going, if you're going new home or you're going to resell, because those are different ways that I handle my clients. If it's a new home builder, way that you want to go because you want the lowest amount down, you don't want to pay closing costs, and the amount of money that you have in the bank is the smallest amount, new home is the way to go. And I would say, let's go check out some new properties and then qualify with a new home lender, because most of the time I'm able to get you pay closing costs. I'm able to pay like
Buy
get
down the rate.
everything. Yeah, with the rate buy down, your payment's going to be the lowest. But what do you give away? What do you give up? You actually give up the fact that you might not have a yard. You know, that's literally in today's situation. But if you say, you know what, I want to have a single story home, half acre, and I don't want a homeowners association. And I don't want anybody to send me love letters, the HOA letters, right? Then I'm going to say, hey, reach out to my lender because you do want to get a pre approval before you actually start the process. Because I don't want to show you a property that's, beyond your ability to pay. So we want to know, okay, what is your current situation? Do you rent? Do you pay money to your family? How much money is your budget, right? Whatever your budget is, we let the lender know. And we tell them, okay, Mr. Kim's, price, his monthly payment, we don't want to go over $3,500. And he's going to talk to the lender. The lender will give you a 15-minute conversation. If you're a W-2 person, it's like it only takes 15 minutes. But if you are a business owner, it gets more complicated. But Oscar, how did I do? Do you have anything that you want to add? The question is, how do I start the process to see if I can purchase?
No, that was great, Yvonne. You did great. Actually, yeah, it all comes down to what your preference is, right, for property. And from there, you know which direction to lead the client, right? You did great. That was amazing.
Thank you, thank you. Why don't you like the question about why new home builders don't offer down payment assistance? There are instances where the new home builder will work with an outside lender, and the outside lender can offer down payment assistance. But the new home builder, they don't normally do that. I don't exactly know why, but I just know that new home builders, they are already paying for your closing costs. So they really want you to have some kind of skin in the game. So because remember, when you
Right.
get a loan, you have down payment and then you have closing costs. So if they're paying your closing costs, you got to bring in your own down payment. Like if you get both things, handed to you, then you came in with zero. And I'm not saying that that's impossible. It's possible in some instances, but definitely, rare. Definitely rare. But I don't want to take too much of everybody's time. I think we are almost our time's almost up. Chris, do you have something that you want to give an advice to a home buyer when they're purchasing a property really quick before we shut this off? And also maybe Oscar want to give us 2 cents?
Sure. Yeah. Let's say always get a home inspection, no matter what. It doesn't matter if it's through me or somebody else, but it's a good idea to always get an inspection. Absolutely. That's my best advice right off the top.
Mm-hmm. Mm-hmm. Okay, cool. That's good advice.
Whether
Oscar,
you're selling or buying, I think it's good to even do pre-listing inspections. Yeah.
Yeah, and I'm actually Chris, how many realtors do you work with? Tell us the truth. How many in your database?
How many are in my database?
Yeah. You don't have to tell me who they are, but how many realtors do you work with?
Oh, well, 17 years of hundreds.
Hundreds?
Yeah.
Okay.
Yeah.
How many realtors actually get a pre-listing inspection?
Not as many as you.
I'm always
You're the number one.
I'm number one.
Mm-hmm.
Why? I do it because I hate surprises.
Yeah.
And, everybody, for me, inspectors, just like anybody else has, like their specialty, right?
Sure.
Everybody's going to say, oh, Chris, you did this inspection. And then later on, I still get another inspection, but you will eliminate at least 80%. You know what I mean? The key is to make it as smooth as possible.
Right. Yeah, we could work both sides of the fence. We want to, do the pre-listing so that we can get them to fix everything so that
Mm-hmm.
when the buyer side comes in,
Mm-hmm.
That inspector has less work to do, and they know they're going to get a good home. And then also you as a listing agent are not going to get beat up on the buyer side either,
Yeah. Mm-hmm. So I'll tell you, one of my team members, her name is Rosa. Shout out to Rosa. She made an offer on a property and the listing agent gave her such a hard time.
Mm-hmm.
And when we did the inspection, oh my gosh, it was like, what the hell? So many little things, blah, 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 blah. I'm sure it wouldn't cost $5,000 to fix it. But you know what Rosa did? She asked for a $4,500 price reduction.
Wow.
And you know what? We got it.
Nice.
Yes.
Yeah, it's a good negotiating tool.
Yeah.
It really is.
Mm-hmm. But that's not going to happen on my listing, sorry, because I already did the hard work. I already did the inspection with Chris, right?
Yep.
Eliminated all the surprises. That was a really good point.
For sure.
Yeah. Thank you.
Mm-hmm.
Oscar, do you have anything you want to tell us before we go?
Yeah, always get a second opinion on rates, right? Don't settle for my quote. Don't settle for the builder's quote, right? Always get a second opinion, get a second quote, right? That doesn't mean you submit the whole credit and income package, right? It takes 2 minutes to get a quote, right? So always get a second quote.
Thank you. That was really good. And you're not selfish at all. Look at that.
I'm not.
You're definitely not.
Customer always first. Absolutely.
Wow. So that was so good. I feel like this is like, how do you say there is a quote that says what is that? When you're like, the high tide lifts all boats. Is that what they say?
I've actually never heard that quote, but I'm sure there's something out there that
I don't know. Is that right? Travis is, nodding, but I love it. The key is, I think that, if we do our best, for our clients, education is very, very important. I love these questions that you guys are giving me and we're able to answer them. So we should do this again. And please send all your questions. You can DM me in Facebook or YouTube or whatnot. We would love to answer all your questions and we will do this again. And thank you so much for watching. And I hope that you guys have an amazing summer. because I know I'm going to have an amazing summer. But if you need to buy or sell, reach out, DM us. We really, really want to earn your business. Look up my Google reviews. You'll see over 200 5-star reviews online. And, I don't want to have a bad review. And that is why I truly, truly hope that you'll give us a chance. Just as Oscar said, if you already have somebody you love, just get a second opinion. I will be your backup. See y'all. Thank you. Bye.